Hi everyone, and welcome back to another Brooks Price Action Weekend Market Update. My name's Tim Fairweather, and today I'll be covering the DAX 40 futures. So each week I review the price action on the higher time frame charts to get an idea for day traders how to position themselves for next week. Each week I usually take a different flavor to approach the weekly report. I bring in some element of price action to focus on, so it's a learning opportunity for traders. Hi everyone. Let's take a look at the higher time frame for DAX. I've got the cash index here. It's a little bit easier without the gaps. So in the prior week, I pulled up the yearly chart. I've got the 12 monthly chart here. I've got a 20 bar moving average, and we looked at a couple of possible measured moves. One was the measured move using that gap. Here is a tight bull channel. Here is a pullback, and that gave us 20,900. But at the time, I was more focused on whether the bulls could get one-to-one of that bull bar. And that was 19,700. And last week was a rocket of a week, 5 green days. Now you can see when I pull up the monthly chart, what we're looking at. We had what looked like a final flag, high trading range. Bulls had a very big pullback, follow through, weak reversal bar that did trigger, and it's basically flipped a measured move up. What do I mean? I mean that if a bear sold under there, they would have to scale in 1 times their signal bar, 447, the high is 428, so we'll probably hit that on Monday. Stronger bears won't sell under a bear bar here. They'll start scaling in, betting that they will overlap the high of that bar. That's likely after a few legs up. It's not the way I typically trade when there are strong breakouts. Here is an open gap, so traders often look for possible measured move targets. I've put it in the middle of that gap, and that's where the 2618. We spent a lot of time around 18,000. We spent a fair bit of time around 19,000, and we've just shot right past 20,000. So I suspect maybe there's a little bit more to the upside, but we'll come back and test 20,000 again. Still always in long, still consecutive bull bars closing on their highs, except this month hasn't closed yet. We're only a week into the month. It looks good with 5 bull bars. The question will be, where will it close at the end of the month? Will we go up and hit this measure move target and form a big tail up here? We'll have to find out in a couple of weeks. I said in my monthly report, this is a high one buy, breakout, pullback. Here's another buy signal. If we put that on the chart, that's going to act as a magnet. So we can keep going up. We'll probably come back to 20,000 and test that entry bar at some point. So that's on the monthly. Here's the weekly chart. So we had a high 2 at the moving average. And I said in my report, it doesn't really matter how many legs there are in a channel, as long as there are bull bars forming around the moving average and closing on their highs, they will typically act as a high 2. Sometimes they rocket up and come all the way back, traders deciding it's still a channel, but this is definitely not a place to sell. This had follow through, and the following week I said, now you've got consecutive bull bars above the moving average. This is a definite buy. It's at the high of the range. Either bears show up on Monday and get a big bear bar to start the week off and bring it back to the moving average, or anyone that is fading in here is in a bit of trouble. And the trouble they were in is that this could very easily go up to a measured move. Anyone selling in this tight trading range, that was the 1-to-1 target we reached. I also have this swing target, which is a 2-to-1 entry. Now you might notice the high in the top left-hand corner of the screen is 20,428, and the 2R target is 433. So it hasn't quite hit that target, but I suspect it will on Monday. These kind of bars typically trigger 3 bull bars above the moving average, always in long, better to be long or flat. We're also breaking above a bull channel, so there's only a 25% chance of this leading to another breakout and another bull channel. 75% chance this will fail within 5 bars, within 5 weeks, and that'll be just after Christmas, first week of January, and then drift back into the midpoint of this channel. It can often test the moving average on the other side. I think the lowest probability outcome is to get another bar like that. Does that mean you can hit sell the market? No, it's 3 bull bars above the moving average and it's always in long. You're either buying or you're flat. As a newer trader, we're always trying to pick tops and bottoms. A better approach is to look at the market cycle and decide, are we always in long, always in short, or in a trading range? Here, we're always in long in a channel. This is a high 2 buy. Now we've got consecutive bull bars. This is always in long here. Bears can argue, did they take out a higher low? Probably, but they haven't got to close below the moving average. And I really don't want to be selling in the bottom part of a bull channel. If you're going to sell anywhere in a bull channel, it needs to be above the highs, scaling in higher. And this is one of the reasons that's a difficult trade to take, because every now and again, this is your entry bar. And now what do? Do you sell more above this bar? It's very difficult to manage. And that's one of the reasons we recommend traders use stop entries. That way I'm following what the bars are doing and I won't get stuck in trades like that. So always in long, expecting sideways up next week on the weekly chart. So if we take a look at this chart before all the action happened, we had 3 legs up. We said, okay, it's a possible wedge. We're not sure when it's going to start. It might have started here. We had 3 bear bars again. We closed that gap. We say, okay, it's an exhaustion gap. Probably need a couple of legs sideways to down. Bear's got a good second leg down. Okay, well, that itself might get a second leg. Instead, we went sideways in a very tight trading range. Bears tried to get consecutive bear bars here, but failed. And you can see at that point, all the tails were on the bottom of the bars. So intraday, no matter how bearish it was, all the closes were above there. If you're short and you see this kind of price action, you can expect the next place we go and test is the moving average. And that's where we hovered. And during that week of trading, we rocketed up to the daily moving average and then we slowly drifted off. Then we rocketed back again and then slowly drifted off again. And then we transitioned above the moving average. Traders can see this as a bear channel, but it's in a higher time frame bull trend, a couple of legs down. We're looking for trend resumption. And if trend resumption is going to fail, it's going to fail in the next bar or two. This is a bull breakout. This is another bull bar. This is basically a high one buy here. Traders are betting that they're going to run the stops of the bulls. Bears had one more shot to reverse it. That's not good enough. And now if we go above that bar, bears are in trouble. And this was the buy signal. And since then, it's been a one-way trip all the way up. Now, when we were here, did I expect it to go there in one shot? No, I didn't. But I know if I'm short here, the only place where traders probably want to sell is at the high of that range. But when this bar closes, you got to think to yourself, well, do I want to be short there or do I want to be short a measured move up? Where's the measured move from? Well, that was the last bear sell signal that triggered down here. That's the top of the range. Do I really want to sell all the way up to 24.15? Not really. I think any bears that were looking at selling the top of the range saw that bar and then reversed to becoming bulls. And that's why this bar was so strong. It doesn't always happen when it breaks out of a range. Sometimes you get a tail, sideways, reversal. But now you've got pairs of consecutive bull bars above both moving averages. This is really not the place to be short. So what do you do here? Well, 1, 2, 3, 4, 5, 6, 7 bull bars in a row. It's a 7 bull bar micro channel. It's got a number of gaps. Better to be long or flat. You can see the bars are shrinking, but this is strong enough that traders will probably expect a second leg. That's a 50% pullback, and that's around about 19,800. I wouldn't be surprised if we go a little bit higher, and then the 50% pullback is 20,000. I definitely expect the pullback to leave a gap here, or at least the bulls are going to try and do that. You can see how important it is when the price breaks out of a range, doesn't come back into that range. We break out of a range, we don't come back into that range. The bulls are going to try and do the same thing again. Now, this could take many, many weeks to do so. You can see how complex that two-legged pullback was. But putting in a lot of distance here will mean this is unlikely to close that gap, become an exhaustion gap, and then potentially measured move all the way back down for trading range here. And that's how head and shoulders tops form. We go up once, we go up, we come all the way back, and now we're in a trading range. The market can keep drifting lower. So what do you do here? Well, if you're a bull, you're still long and you don't have a sell signal to get out. You've also got 1, 2, 3, 4, 5, 6, 7 bars in a row. How often do you get 7 bars in a row without a pullback? 1, 2, 3, 4, 5, 6. Pullback. 1, 2, 3, 4, 5. Here was the last time. 1, 2, 3, 4, 5, 6. So this just kept going for another 7. That's what the bulls would like. 3, 4, 5, 6, 7. So 7 is a good number. Can you initiate a position there? Well, your stop's all the way down there. So I suspect you're going to run into profit taking, but still nothing to sell. This is a tight channel. First reversal down, likely to fail. Will probably form a broad channel. As I said before, because this is so large, 50% pullback back to 19.6 would still not be any concern for the bulls, betting that they'll get some kind of high 1, high 2 buy setup to at least go and test the highs. Bears are going to need a double top that's fairly strong to reverse it. If we look back, this is in March of this year, this whole sell-off of 1,200 points was met with trend resumption. Even that double top wasn't enough. Here is the head and shoulders top I was talking about before, and bears want that. So always in long on all time frames, but it's starting to get very climactic. This is very vertical. If you look at the chart, whenever the price goes vertical, here it goes vertical, vertical up, vertical down, vertical up, vertical down, vertical up, down. So now we've got a new vertical up, something like this or this is going to be the works at some point. I think we're at measured move targets though, and we'll see next week whether traders are going to take profits. Probably get some daily bars with a big tail above, which is going to tell traders they should take some of their profit. Well, thank you very much for watching. I hope you found that valuable. If you've got any further questions, please feel free to put them in the comments below. For those of you on the Brooks Price Action Discord, you can also reach me on there under Tim F. If you're in the Brooks Price Action trading room, you'll be able to catch me live trading tomorrow night. Otherwise, please tune into my channel. I'll be posting new videos through the week. Have a great trading week, and I'll see you next weekend.